Hello, 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 and a massive hello to everybody. Hope everybody's having a great day wherever you may be, whatever you may be doing. Here we go, here we go. It's the 20th of August, 2017. No trade calls, no recommendations. Everybody's sponsored their own stuff. We're here for educational purposes only. And again, back after 1 week off. So what's happening? Main event, I mean, we do have some data going into the week. You know, we're going to have some core retail sales out of Canada. We got all the PMIs. We have the weekly jobs numbers. We still, of course, we're going to have crude oil inventories. We got GDP out of the UK. But really, it's all about Jackson Hole, you know, and Draghi and Yellen speaking. So we'll have to see what happens or what comes out of the central bank arena, right? Unless some other shenanigans hit the wires from Washington. So what's happening here in terms of VIX? Nothing much is going on except that it's staying bid. Nothing changes for us. We said before we get a close below the 9, we'd expect this to spike much higher. So that's still in play. I think what's interesting, if you look on the equity side, is that these moves are in play, right? So we've our base case was that equities had topped and we're getting some kind of a decent correction or a healthy correction here. So you see the first level we're looking for on the SPX is the 2400, and you know it's moving, it's in line. I think what's particularly interesting is if you look at the action, you can see the weeklies are fairly heavy, and actually if you even drill back and look at it on the daily, it's quite telling. You see this failure, then we had the puke, we had the gap up and the ramp early on in the week, and we closed last week below those lows that got bid on the gap up. So it's not looking too hot. Again, anything can happen, but it looks like market is trying to correct. Closes below the 50. We'll have to look at how the market reacts around this 100, but the way this is trading, we expect the market to be in sell rallies mode for that bigger correction to be in play, and then we have to see what happens to this 2400. And it's very similar action across the board. If you look at you know, NDX, we closed below that 50. Similar action, you know, where we closed back below last Friday. And if you look at the action on the weekly chart, it's clearly not looking too hot here. We've got about 4 negative closes in a row, right? And our base case was that NASDAQ was the tell. Dow also heavy, and the other tell for us was the RUT, right? And you can see here in terms of the RUT, closed below the 200. And here, if it closes below the support zone, this could get very, very ugly. You don't have a lot until this level, right? And in terms of bigger zone, remember, we're looking for potentially much bigger move down. So again, that's the equities are getting interesting. Finally, they're getting interesting. We'll have to see what happens. Always a little bit tricky in the summer months, but it's looking constructive. Dollar index, no big change for us. The chart that matters, the time frame that matters is the weekly, right? And here our base case is that we have some unresolved business below this 200, below this level, and here we haven't really done much. So nothing much changes for us. 94.50s, daily closes above. Don't be surprised to see a bounce, and that could be triggered on Jackson Hole. You never know. And below the 91, 92s, they'll be very, very heavy, but we still look at this zone as rallies as being a sale. And again, crude, gold, very nice. Our base case is still that we're going to press those 1300s and then move into the 1350s. So far, so good. We got that nice rotation higher. And here we've got a bit of a reversal. But again, it's summer trade, so it's difficult to read too much into it. So as far as we're concerned, we're just going to stay on the bigger time frames and continue to look at it the weekly. And unless we don't close below the 1250, we still think this is choppy action, but this is a firm base, and ultimately we're going to continue to move back into the 1350s. In terms of, again, drilling into these Forex, you see what's very interesting, if you look at Euro on this 200, with this 200 on the weekly too, is, again, we could see some wheeling and dealing, but you see how nothing much has changed. Unless we don't get daily closes below the 116.50, we still think that this whole area is velocity of move inside range, and nothing really matters inside here. It's very, very choppy. We need to get daily, weekly closes back above the 2050s, or daily, weekly closes below the 1650s before something happens. And we'll have to see what happens out of the Fed, what happens out of the ECB, but it does look like the Fed is really eager to continue to go, and the ECB maybe is worrying a little bit. But again, as long as we hold here, there's not a lot going on. But you see how it's still struggling. So unless there's really a shocker out of Draghi, out of Jackson Hole, you'd expect any dips to find buyers here. Where to look for if this gets very, very heavy? Well, below the 1650s, then we'd have to be looking at these basically 113. You'll have these moving averages starting to come, this breakout zone. This would be the key level to look at, right? But right now, it just looks like there's not that much going on. Yen, again, very, very nice. It was good. We said sometimes the best trade on the board is one you're already in. No need to micromanage it. And our base case here is we had to go back into the 109.30s as long as we're holding below the 112, and that move played out quite nicely. So here it's really time for the bulls to come in and catch this, because if this can't catch a bid pronto here, then 106 and sub 106, it gets very ugly. You got the 100 further down, and that'll probably be linked to equities. But I think to the downside, the level to watch, 108, that's a big bull bear line. And on any bounces, you want to look at here, but really as long as the 112s don't give, we still expect this to trade lower. Cable, heavy, our favorite way to play GPB weakness still remains and has been on GBPJPY. And, we had plenty of opportunities to get short here, and it's moving quite nicely. Here you see it's holding below the mid-range. So our base case here, again, was very tight risk, under 1% risk to short this. You've got about a 7-8% into the lower end of the range. And here, if you look at these moving averages, if this is going to load them on, as long as we hold below mid-range, as long as these moving averages are capping to the upside, we still expect this to try and make its way back into the 135.70s. And this is the core, what we call primary trade. Anything lower would be gravy, but that's still the primary trade in terms of range trades. So this play is still 100% intact. Again, don't forget to look at what we were the tells last week, right? We said going into last week, beautiful opportunity to short XLF. Said you have to look at this on the weekly on that close. These are very, very high odds trades. Let's see if we can plot it on here. See, after this negative close on the weekly, it's very difficult. You're not going to come in and buy this, right? You got about it under 1.5 risk for about 2% back into the bottom end of this range, but clearly this could get a lot of traction. These are very, very nice trades, very, very nice signals on the weekly. So here, what we would be looking at, as long as we hold below this zone, as long as we don't close back below this, sorry, this is on the daily, not on the weekly, I beg your pardon. As long as we don't close back above here, above this 50, we still expect this to continue to come lower, a lot of nice action. The other big tell was basically, XRT holding extremely heavy. Retail is just looking extremely heavy. Look at this on the weekly. Look at it on the monthly. If this lets go, it's really not pretty. Where to look for to the downside? Well, again, there are a lot of different levels, but if you look at this move from lows to highs, the fact that it's been getting bid here, front run here, if this lets go, there's no reason why you can't set this $8 to the downside. Transport's extremely heavy. Again, a lot of nice little shorting opportunities here, but this is looking extremely, extremely ugly, right? Pop getting sold. If we take this out, then we'd expect this to come right back down into these lows, right? So again, also here, $5-6 to the downside. and you know, a lot of weakness on Amazon. The weekly, this one pretty much a gift, you know, failure back below the 1,000. This is looking very, very heavy. Look at Tesla. Nothing much has changed. We're still looking at these shorts to look for a move to come back into this lower end of the range. So again, it's a week where we could get some interesting action, where we could see stuff trying to accelerate. It's a tricky one, by the way, here on DAX, finished into these 12,000. We're looking for this move to come back down. Primary trade is gone. This was a particularly nice signal, as we said. You know, you look at this on the monthly, extremely heavy. This has potential to correct much, much lower. So again, it looks like this weakness is starting to come in on equities. It looks like they're going to try and get some traction. It's a tricky one because it's still summer trade, summer chop, but nothing much has changed for us. We think the focus is on equities. We're bearish equities. We think the top is in. We think it's time to see some healthy retracements. They could get ugly, but we want to see VIX, you know, back above those 20s. We want to get some decent fall through on some of the moves. And again, hope it gets interesting. We'll be ready whatever happens. Have an awesome week. Thank you for listening. Thank you for sharing. Thank you for liking, and see you guys around. Back in action. Bye-bye, guys.